All right, so that brings me to number 4, which is commodities. And let me just get the rag here, or the cloth. Get rid of my little Tesco chart that I drew. Okay, so commodities, we've got the obvious ones. There are loads out there, guys, but we've got the obvious ones like gold. We've got crude oil. We've got things like coffee. We've got things like cocoa. I'm not going to put them all on. Silver. We've got things, platinum. There are very, very many. Now, let's talk about some of them. The most popular ones out there are crude oil. You've got US crude and you've got Brent crude. Two different types of crude oil. It's very, very similar chart patterns, but from time to time, they will kind of go out of sync. But generally speaking, the broad pattern is very, very similar. So pick the one that suits you. Spreads are nice and tight on both of those. Most of the time, crude oil, West Texas Intermediate is a little bit of a tighter spread than Brent most of the time, but broadly speaking, they're great to trade. And they are really news driven. OPEC drives those, where they come out and say they're going to cut production or they're going to increase production. Terrorism drives those. Specific countries' response to things. The security in a specific country. All these kind of things affect that, as does global demand. If demand is shifting to renewables over a longer period, perhaps a longer term thesis, then crude oil will become less in demand and will fall down in price. If perhaps innovation in, let's say, efficiency of jet engines or whatever it may be will bring down price. Consumption, again, we've still got things like plastics and things that use crude oil, so that will give a bit of pressure on price still. China is a big one. If they're still booming, they're going to be in big demand to have lots of oil, as they will with things like copper, as they will with things like gold. Copper is used a lot in industrial applications. Gold is more of a safe haven thing. Let's move back before we go on to this thing of which are the most popular ones. Oil and gold are pretty much the most popular commodities to trade. And if you're going to start trading, probably good ones to watch. Gold has gone a little bit quieter in recent times. There's one time when it was just absolutely going crazy. And it's, this is where you shift around as a trader. Sometimes you might go with your stocks. Sometimes you might go with the currencies thinking, well, yen's kicking off. Sometimes you might go and say, well, we've got a bit of a volatility. So if you're a volatility junkie and you look at volatility, you move around, the 4 quadrants of trading instruments. So gold and oil are very, very popular, very, very cheap to trade, very tight spreads, good for swing trading, good for day trading. Sometimes day trading, if they go quiet, it can be a little bit of a not quite as lucrative. But when oil's going crazy, oil and DAX were kind of, if I look at the two things that I've done the most out of in 15 years, those two were the big ones, only because when oil was coming off the highs, it was a very nice day trade from a bear perspective, and DAX was very volatile. So and gold as well. Gold had that time when we spiked up dramatically and we're falling down dramatically. Silver, much more volatile compared to gold. When gold's moving, silver kind of moves. They move in tandem almost. They do go out of sync, but silver is much less liquid in the actual underlying market, and because it's less liquid, it moves a lot more in a more volatile manner. A little bit like the DAX, the price of the contract as well is quite high, so it puts a lot of people under a lot of pressure as well. Copper, good one, very industrial based metal. A lot more, the story recently has been a lot more focused on the demand in China and the emerging markets, how they're using copper, how much demand there is, what the stockpiles are. I don't profess to be a commodity expert by any means, but I do like to look and see what's going on, because if I find something that's moving, I might tune into it for a week, for a 2-week period, have a broad thesis of where it's going, maybe day trade that, or even look to get into a swing trade from a day trader's entry and trade it from that perspective. Then you've got the soft commodities like cocoa, corn, wheat, coffee, cotton. I'm trying to think of all of them. There are plenty out there. You've got the meats, lean hogs, live cattle, got soybeans, got soybean oil, soybean meal, and then there's spreads you can trade on that. But the point is that you need to find something that suits you. These kind of smaller commodities like orange juice, for example, like cotton, are going to have a wide spread. However, if you've got a longer term 9-month plus thesis on it and you want to trade that, it doesn't matter. The spread is irrelevant to you. It's not a factor in your decision making. If you're looking to day trade it over a 15-minute period, then it is very important. So when you're picking something to trade, you need to kind of look at what your ultimate goals are as a trader, how you're looking to trade it, what your style of trading is in terms of frequency and in terms of strategy. Are you mean reversion? Are you momentum trading? Are you looking to fade the crowd? Are you looking to join the crowd? Do you want to get on a trend and tuck it away for a year? Do you want to get on a trend and take it out? Do you want to wait for the end of the trend? You know, I can go on and on and on. So the point is here, as with all of this kind of thing, is we've got so much. This is the best possible time in our lives, in a lifetime, to trade. Trading is cheap. It's very cheap because the landscape out there, the brokers are fighting to give us a great deal. So check out, some of the brokers that we recommend in terms of security. They're good for security. They're good in terms of being very, very cheap. It doesn't cost you a lot to hold trades overnight. You don't have to have a lot to have in your account. Just not very long ago, you'd have to have loads in your account. It costs you a fortune to trade. You have to go through jump through all sorts of hoops to open an account. It's a great time to trade. We can trade any of these things we like. Now, the one thing that I would I would say to you guys is that if you're watching this is, listen, there are so many things that we can trade, but focus your efforts on one and stick to it, even if you're struggling. I promise that will be the best way for you to go. I've seen this so many times with traders. I've done this myself. You start off and you start trading currencies and you lose money. And you think, you know what, the next thing is I'll see people tweeting or talking about trading crude oil and doing very well. I'm going to trade crude oil, and then you lose a bit of money. Then you go and trade indices and you lose money. Then you go and trade stocks and you lose money. Then you go and trade. Stick with one thing. Take more time to work out exactly the market or the type of instrument that suits you. I'm going to talk about that in a second, and then work out the strategies that suit you, and then work out exactly how long you're going to give that before you move on. And you have to give it a certain period of time. Expect to lose, but understand that, okay, if I give it 6 months and I trade these basket of strategies in these specific group of instruments for 6 months, I'm at least knowing what I'm good at, what I'm not so good at, what I can improve on, whether I need to stick to this, whether I need to find something else. And then the point is that you may say to yourself, listen, I recognize now that I'm very good at this. This market isn't very conducive to that strategy. So I'm now going to I'm going to find a market that fits with that strength, if you like. So instead of then hopping over just because you see someone else doing something good, you can say, well, actually, I'm very good at trading momentum on a trending environment. I'm going to now find something that is trending, as opposed to then finding something that you think is profitable. I'm going to find something that suits my strengths. That's the way to improve as a trader. That's the way to find your sweet spot as a trader. That's the way to make money in your way, as opposed to following everybody else out there.